DA, I am not going to lie, a little bit less familiar with the realm of biotech investing. So I'm curious, are you seeing similar dynamics in your part of the market?
Well, I don't want to be a wet blanket here, but biotech is sort of in the Great Depression right now, and we're about 3 years into it. And the reasons why we got there are complex, and we can get into some of those later. But the bottom line is that the biotech capital market has basically been shut down. And that has been led by the public markets, which have been effectively totally closed to public offerings for some time now. So, uh, with the exit doors effectively closed, the private market has suffered tremendously. It's been incredibly difficult for companies to find capital. That is even true of companies in biotech with an AI theme. They may be able to attract generalists who are maybe not super historically embedded in the sector. But when it comes to the specialist biotech investors, even the AI companies are not garnering a lot of excitement right now. So it's a very difficult time. That makes it an interesting time to navigate as an investor and a difficult one. And we can get into some of the nuances of that as the conversation evolves.
Just really briefly, when I was learning about venture capital and IPOs, one of the rules of thumb was that biotech companies tended to go public earlier and that it was a capital formation function. So, DA, does that just mean that because the IPO market has been so rigid or closed, if you will, that a fundraising mechanism and liquidity mechanism at the same time is being closed, is putting you into a depression, as you put it?
That's exactly right. And so if you think about, Matt and Anastasia can speak to this better. But in the past decade or 2 decades in the tech VC market, so much capital has come into the private market, and it's enabled companies, as everyone knows, to stay private much longer. And by contrast, the same thing has not happened in biotech. And so companies still need to go public merely to access the capital that is required to develop drugs clinically. So going public is generally the beginning of the clinical journey for biotech companies. It's when they start to raise the capital sufficient to take them into human trials, and they'll often stay public for several years as they move through those trials, either towards an eventual commercial launch as an independent company or M&A to one of the big pharmas.
I
All
would
right,
love to double click on this if
please.
this is okay. This is very interesting to me, coming from the enterprise software AI side of the house, which is there's such constant interest in what we're doing from a private and public markets perspective. I'm wondering, what are the dynamics in terms of different investors in biotech that is demonstrating or causing this effect where other capital sources are not coming in earlier?
Yeah, it's great question. I would say that the public market is driven by a combination of biotech specialist hedge funds that just do biotech for a living, and then the usual suspects when it comes to the big multi-strategy hedge funds or the large mutual funds. So think everyone from Citadel to Fidelity to T. Rowe Price. And historically, biotech companies require both of these constituencies to survive and to IPO and then do follow-on financings. So what's really happened in the past several years is that the generalist investors rotated out of biotech, essentially all at the same time, leaving only the specialist funds. And even in the aggregate, they're not large enough to carry all of these companies by themselves. So essentially, everyone has been on hold waiting for the generalists to come back into the sector. And why they have not is multifaceted. Some of it has to do just with the relative opportunity that they've had in large cap tech. And, if you could earn 18, 20, 22% a year with ostensibly low risk, why would you bother gambling on these super risky binary biotech stocks? So I think it's been the competition over that essentially public risk capital that has led to this shortage of available capital for these companies.